Hello, everyone. This is Matthew. What I want to do is have a quick look at a setup that's kind of taking place right now. This is a live view. It's May 5th, and it is coming up as a beautiful candle. It was in one of the ideas that I posted. Um, I believe it was yesterday, yeah, it was yesterday. So this candle is a weekly candle. You can see that it's come up. It's made a pin bar, a high wave candle. It's not really a doji, shooting star, whatever you want to call it. It's a prominent candle, especially on a weekly. We've had price sell off aggressively over the last several weeks, and then it's been on a retracement. Now, this retracement just happens to line up perfectly, and the reaction today was pretty strong, actually. It lines up perfectly with that 61.8 fib level. When we talk trade ideas, we talk fractality, the fractality of markets, a ridiculous word, but the idea that waves are happening within waves in lower time frames. And let me show you what I mean there. So there's the sell off, the retracement hitting the 61.8, and we believe further downside to this pattern. So we're zooming in now. We're going to grab the daily, getting on in and looking at the patterns that are setting up there. So there's the 200 EMA. It's pulled up, it's kissed that, it's formed a beautiful, I guess you could say tweezers. It's not, I would go with, it's not even really a harami, but it is a reaction that we can get excited about. This here as well, I believe I posted an idea on that. You can see the conviction in this kind of a rejection compared to this kind of a rejection, while still something we spoke about as being a high wave candle, being unique to the previous candles. I guess maybe not that one, but we were starting to build up a pattern. If you looked left, you had areas of support, resistance starting, and then up here as well in these wicks. So price carried on a little bit further, and then we had that strong rejection. And now in this is a pattern, and we talked about that. We talked about getting into the waves of patterns, and I did a video on that confirmation squared, bringing it down to this level because this wave, whether it took a couple days or what have you, it's all built into the same wave as you start dropping down into 4 hour, 1 hour. You can see that that fib is still holding true. So an interesting, just I'm sure if we bring it in a little more cleanly as we get tighter here, we'll notice like when we talk technical analysis, I know it is not everything under the sun. It is not the holy grail. For me, it makes a lot of sense. And when you start overlaying macro drivers on top of a lot of these patterns, you can start trading at higher probabilities. And that is where we shine. We shine at higher probabilities. We let the math take care of itself. We're using asymmetrical risk reward. You could have the best trade setup on the planet, and this is starting to look like that right now, and it can go against you for an untold number of reasons. So we trade our plan, and that plan is risk management and asymmetrical risk reward. So let's get back on track. So we have prices sold off so swiftly and it's pulled up at the 61.8. Really, my sweet spot, I had a limit order set at the 50. It triggered, and now I'm seeing a lot of conviction that this trade will at least get us to here, at least get us to these levels before carrying on further. If you look at this is also a classic bearish flag, in my opinion. Also, if you look left again, there's more resistance and support questions, but let's look at this pattern in this flag formation. So when you have price selling off, bouncing off of something, a 4-hour 200 EMA, in my opinion, does matter. You can see it has in the past. And we have had a rejection. I'm looking for further downside. With this being the height of the flag pole, what you can do is you can start projecting that downward. So let's get I'll probably have to zoom out a bit as well, um, just to catch the whole meat of that move. And when you have the move that we were discussing, where were we, around 1800 or so? when you start looking at this pattern, now this is obviously textbook, and if it carried on, textbook as well. So we'll keep an eye on this pattern. But what I would be looking at again is your support levels. So here would be a support level. You can see that kind of change of polarity is what it's called, where this resistance blew through and now it's become support. It was resistance into support. So if you look left, it keeps telling you a lot of pictures. When you're zoomed in like this, and you start coming out, you can see that sometimes we have to remember where we are in a move and that we're not too laser focused on a 1 hour chart or something along those lines where we're getting right down to things. But you can see there's that moving down, rejection, and you can see that we've hit these levels. It's the same fib. But what I also wanted to show you is as you start bringing it right down into these patterns, you get that same sweeping flag pattern happening here. So we're going to watch this trade. We're going to see what happens. And we have the down, we have that rejection. There's those EMAs again. It's pulling back up. Not quite at that 50% level if you really wanted to start working off of a 30-minute chart. But I'm in this trade. I'm short, and we will see what happens. And we'll chat on the next video.